Welcome back to the cryptowrld channel, everyone. My name is Josh, and right now, Bitcoin is repeating history as this signal is pointing towards a further recovery in the price. But in the shorter term, the price of Bitcoin is now struggling around this key area of resistance that we need to pay attention to. So in just a moment, I'll be talking about my exact Bitcoin trading strategy alongside the price of Solana, which is now officially confirming a breakout above a key Fibonacci level, pointing towards a further bullish movement, while the price of Chainlink is getting extremely close to breaking out above this significant area on the price chart. So I'll be talking about all of that and so much more later in the video, so definitely watch to the end. First of all, just before taking a look at the Bitcoin and crypto charts today, taking a quick look at some Bitcoin news today, because just yesterday on Wednesday, we saw a massive net inflow again into the spot Bitcoin ETFs. In fact, this inflow actually beat Tuesday's inflow of almost $1 billion US. And so obviously this week so far, we've seen a lot of buying pressure, a lot of demand coming in through the Bitcoin ETFs. So first of all, on Monday, we saw a net inflow of over $381 million US. Tuesday, we saw a net inflow of around $912 million US. And then just yesterday on Wednesday, we saw a net inflow of $917 million US. So almost $2 billion in inflows in just 2 days. And so obviously this is helping to pump the price of Bitcoin here in the short term, as we've seen over the last few days throughout this week so far. And in fact, just yesterday, BlackRock alone bought over $643 million worth of Bitcoin. So over $500 million worth of Bitcoin was bought by BlackRock just yesterday. Because in case you're new to all of this, basically these are spot Bitcoin ETFs, which means these inflows right here go to the ETF providers like BlackRock, Fidelity, etc. And those ETF providers have to buy Bitcoin with that money in order to back the Bitcoin ETFs. And a lot of beginners out there make the mistake of thinking that $1 billion worth of buying pressure increases the market cap of Bitcoin by $1 billion, but that's not at all how the price actually works. The price is determined by volume and liquidity and not determined by market cap. In fact, it's the other way around. Market cap is determined by price multiplied by the supply. And so, for example, a $1 billion demand or $1 billion buy order for Bitcoin can actually increase Bitcoin's market cap by tens of billions, if not hundreds of billions of dollars, just with $1 billion actually entering Bitcoin. And that's the same with a lot of assets out there. But with that being said, taking a look at the Bitcoin charts today, here on the 4-day time frame, the super trend indicator has not changed over the last 1 day. And here on this weekly time frame, this bearish divergence on the weekly chart has not changed over the last 1 day. So getting straight into this weekly Bitcoin chart, and right now we're still seeing a recovery moving towards a bullish crossover here in the weekly Bitcoin MACD. And obviously I've already been saying over the last couple of weeks or so that we're seeing declining bearish momentum, which is a sign that we're obviously moving towards a bullish crossover and a sign that we're in the recovery out of the correction, as we've seen at times before. And of course, I've also been mentioning over the last 1 month, you can check any one of my videos over the last 1 month and see me talking about the fact that we're actually slowing down the bearish momentum. So even before we started the decline in bearish momentum here, we were of course slowing down the bearish momentum, as we can clearly see for over a month now, basically telling us that the worst is already behind us. We've already seen the majority of the bearish momentum within this correction. And so obviously that is still perfectly playing out, as I've been saying for a month now on the channel. And right now, once again, we're in the recovery heading towards the next bullish movement, at least based on this indicator right here. And if we're taking a look at the 3-day time frame, obviously over the last few days, we've already seen a major breakout above this significant area of resistance right here, which was sitting in between around 86,000 to 88,000. And this also means that we have a double bottom pattern here, a W pattern. And now that we've broken out above this resistance, technically speaking, we still need to confirm the candle close, but at this point, it's practically confirmed, especially on the daily time frame. We've already confirmed the breakout here. So if we're measuring the technical price target based on this double bottom pattern or W pattern, that places a price target based on the candle closes just here at around $99,000 per Bitcoin. Or if we're looking at the maximum price target, the bottom of this candle wick right here, that puts a price target at around 104,000. But obviously between the current price of Bitcoin and these technical price targets, we have points of resistance that we cannot ignore where the price would likely struggle at. And at least based on this 3-day time frame right here, based on the volume profile indicator, we have a lot of traded volume acting as resistance at around 96,000 to 97,000. So expect some resistance around there. And as for support, based on this chart right here, I would expect this previous area of resistance to flip into new support. So if we were to see a pullback here, I'm not saying we will, but if we see a pullback, expect support in between around 86 to 88,000. And if we're taking a look at the daily time frame, obviously right now we're simply continuing that bullish breakout beyond this descending line of resistance. And of course, we saw a perfect short squeeze over the last few days for around half a week here. And if we're taking a look at this daily time frame, technically speaking, we're still perfectly playing out the bullish divergence, as I've been saying since all the way back down here. And so considering the fact we've not yet seen any invalidation signals to invalidate this bullish divergence on the daily time frame, at least for now, we're likely going to continue to play out the bullish divergence, which means expect somewhat similar price action to what we've seen over the last 1 week, give or take, as a most likely scenario moving forward. But once again, keep in mind we have points of resistance I'll talk about in just a moment. And also keep in mind the daily RSI, like I said in my last video, is currently getting very close to overbought territories. And so once again, like I said yesterday, it's not there just yet, which means technically speaking, we still have a little bit more room towards the upside before we actually hit overbought on the daily time frame. But considering how close it's getting to overbought territories, it's very likely that sometime very soon, potentially right now, we've already started to see it, but sometime at least over the next couple of days, it's likely we're going to see a bit of a slowdown, basically just cooling off a little bit in the short term from all of this bullish price action here. But it is important to understand that that does not mean we're going to see a major crash or anything like that. Once again, just potentially a bit of a cool off, either some choppy sideways price action or maybe a slight little pullback, kind of like what we've seen over the last 1 day or so as a likely scenario in the next few days. And that simply just helps to reset the RSI back down towards more neutral levels, which can technically give us more room towards the upside later on for a potential further breakout. And if we're taking a look at this daily time frame, we have major resistance, the golden pocket area of resistance, which is the most important Fibonacci area on the price chart, and that's sitting in between around 94,500 to 95,500. And if we're looking at where the latest rejection occurred, that basically happened at pretty much exactly 94,500. And so obviously the price of Bitcoin is continuing to respect these technical levels very nicely here in the short term, as we also saw right here. We saw a perfect rejection from this Fibonacci level down here in the short term. And so this just means expect the price to struggle around this area on the price chart, most likely for the next few days. Now, of course, eventually we can see a breakout here, maybe after we first see a little bit of a cool off to reset the RSI, gather some strength here in order to ultimately see a breakout, especially considering here on this weekly time frame, the MACD is pointing towards a further recovery. And so when we're considering all of this information, at least based on my strategy right now, based on my personal position, I am still long on the price of Bitcoin, which means overall, I am indeed bullish on the price of Bitcoin. And of course, like I mentioned in my last video here on the channel, I did take some profits out of this Bitcoin long position right here. But like I also said, that does not mean selling any Bitcoin, selling any long-term Bitcoin. It's just taking profits out of a leveraged long position. And like I explained in my last couple of videos here on the channel, this started out as a 100k Bitcoin long position, and right now it's only a $72,000 Bitcoin long position, as I also mentioned in my last video. So since yesterday, I've made really no changes to this trade. And of course, my trading strategy in regards to taking profits was simply just taking profits around some key points of resistance along the way towards the upside, because it's at those points of resistance where the price would likely struggle at and possibly see rejections from. So that's once again why I take some profits out of these long positions around those points of resistance. And so I took some profits right around here, and pretty much right after I took profits, obviously we saw a bit of a short-term cool off over the last 1 day, as I've been predicting. But of course, I've not closed the entire trade. I only just slightly reduced the size of the trade at these local highs just here, because overall I am still bullish on the price of Bitcoin. I still think there's more bullish price action to come. Ultimately, once again, we might see a little bit more of a short-term cool off, but maybe in a few days from now, maybe next week, we're likely going to see some more bullish price action, just in my opinion. As always, no guarantees. And so overall, I'm simply just holding this Bitcoin long position, especially right now. The funding rates here over on 2bit for the long positions are actually negative, which is very good news for the long positions, because right now with me right here in a long position, I'm basically earning fees. That is right, I'm earning passive income in the form of funding fees because the funding rates are negative. And so that can also contribute to a further short squeeze. If the funding rates are negative, that means a lot of people are still trying to short Bitcoin even while we're seeing bullish price action. And so due to all of those reasons, once again, I'm simply just holding the Bitcoin long position, basically trading a further breakout towards the upside. I think ultimately we're going to break out here, but even in the worst case scenario, if we just see a major rejection, of course, I've already taken some profits out of that trade, and my stop loss, as you can see right here, is above my entry, sitting in profits, which means in the worst case scenario, if we just crash, that would hit the stop loss automatically and close the trade automatically in profits. And so obviously, if you've been following along with my exact trading strategy, which I've been sharing very transparently over the last few days here on this channel, you should be making some decent profits as I'm doing right now. And if you want to actually take these trading opportunities like what I'm doing right now, I'm taking this trade right here over on 2bit. So I'll make sure to leave a link to 2bit below this video in the description and in the pinned comment. And if you use that link to 2bit, it will take you to this page right here where you can claim some massive trading bonuses, like for example, up to $50,000 in trading rewards just by using that link and trading crypto. But if you're not one of these larger traders here, you can still claim a $30 sign up bonus and a 20% deposit rebate up to a max of 200 USDT. So basically $30 just by making an account using that link. And also if you deposit, let's just say $1,000, you get a $200 bonus if you use the link below this video to 2bit. And on top of all of that, if you use the link below this video, you're automatically upgraded to VIP level 1 trading fees, which basically means you get a massive discount on trading fees. You get lowered trading fees over on 2bit, but once again, only if you use that link. So if you're going to be trading crypto anyway, like I'm doing right here, then make sure to check out that link below this video. And in case you're wondering, 2bit is a no KYC exchange, which means you can access it from basically any country in the world without needing any KYC. But as always, check your local regulations when it comes to trading crypto. And for whatever reason, if you don't want 2bit as an exchange, there's also Bitfinex as another exchange out there that I also trade on. So I'll also make sure to leave a link to Bitfinex below this video. And if you use that link, you can get an exclusive 10% discount on all trading fees. That's a massive discount over there, which by the way is a lifetime fee discount, which you can only claim using that link. And in case you're wondering, Bitfinex is also a no KYC exchange. And so once again, that is my exact trading strategy for the price of Bitcoin, very transparently showing here on the channel. And if we're taking a look at the Bitcoin liquidation heat map right now, obviously we've already seen a decent short squeeze over the last few days, exactly as I've been talking about for a week now. But right now we're heading towards the next liquidity towards the upside, which is sitting at close towards around $100,000. And so all we need to see now is simply that breakout above the golden pocket. Once again, we may continue to struggle around this area for a little while longer, just in the short term, in between 94.5 to 95,500. But once we can finally break out above that area, expect a continued move, likely up towards around 100,000, around 100,000 to 101,000, which is this next point of resistance at 101K. And if we're taking a look at Ethereum on the weekly time frame, right now Ethereum is still perfectly playing out the bounce from this major area of support, still sitting in between around 1.4K to 1550. So once again, expect a lot of support at 1,500 approximately, as I've been saying for a long time now on the channel, since pretty much all the way back up here. And while the price is playing out this bounce in the short term during, by the way, a larger bearish trend, keep that in mind. Technically speaking, we're also now running into this Fibonacci level of resistance sitting at very close to 1.8K. So that $1,800 level is still currently acting as short-term resistance for the price of ETH. But once we can finally see a confirmed breakout above 1.8K, with ideally candle closes confirming on the daily time frame above 1.8K, and ideally flipping that into new support, in that situation, the next price target and major point of resistance to watch out for is sitting at close to 2.1K. And also, if that happens here, and then if, for example, we see a rejection from around 2.1k and then a recovery again, we have a possible inverse head and shoulders pattern forming here on the daily time frame that we need to pay attention to. Obviously, right now it's still a long way from potentially confirming, but it's something to at least pay attention to as it continues to possibly form. And speaking about inverse head and shoulders patterns and head and shoulders patterns, if, for example, we play out this inverse head and shoulders pattern and see a further bullish recovery over the next few weeks or months, technically speaking, that could possibly create a larger head and shoulders pattern on the weekly time frame. Remember, each one of these candles is one entire week. And so even if we play out that bullish pattern here in the short term and actually stay bullish for a number of weeks or months for Ethereum, technically speaking, once again, that could possibly just form a larger right shoulder over the next few weeks or months for the price of Ethereum on this weekly time frame, which would be very bad news for basically the next 1 or 2 years. But obviously right now it's still too early to tell if that's definitely going to happen. Once again, we're still just possibly in the formation phases for these head and shoulders and inverse head and shoulders patterns, which is why I'm currently just pointing them out, but not saying they're confirmed or anything like that. And if we're taking a look at the price of Solana on the 3-day time frame, obviously right now Solana is still perfectly playing out the bullish divergence, as I've been saying since all the way back down here. So once again, continue to expect a bullish relief as one of the most likely outcomes from a bullish divergence. And as I always say, especially while Bitcoin plays out this bullish relief, that really helps a lot of the crypto market. A lot of these major altcoins here play out bullish price action if Bitcoin is playing out bullish price action. So keep that in mind. And if we're taking a look at the daily Solana price chart, just over the last 1 to 2 days here, we've now actually confirmed 2 daily candle closes above this Fibonacci level of resistance, the 38.2% Fibonacci level of resistance, which is the second most important Fibonacci level behind the golden pocket. And so obviously this is a short-term bullish signal and actually a massive change in price structure from this bearish trend on the daily time frame, clearly for a number of months here since almost the beginning of the year. Around January this year, we've been in basically a bearish trend on the daily Solana price chart, forming lower highs and lower lows. But just recently, with the latest breakout above this Fibonacci level, we've actually created a new higher high. And so once again, as I just said, this is the first major change in price structure on the daily time frame, pointing towards a bullish trend reversal, finally out of this bearish trend into potentially a new bullish trend. And that new bullish trend will actually be cemented and further confirmed if we form some sort of higher low in place in the price of Solana. And the next major point of resistance to watch out for as we continue this bullish relief here is sitting at around $167. So expect a lot of resistance at 167, and above that I would expect more resistance at close to 180, around 178 to 180, and major resistance in between around 191 to 200, so around 190 to 200. And if we're taking a look at the price of XRP on the 3-day time frame, right now, technically speaking, this bearish divergence has not yet been invalidated, but we're getting very close to possibly invalidating this bearish divergence, because if we simply form, for example, a higher high in the RSI above this previous high right here, that would be one invalidation signal pointing towards the invalidation of the bearish divergence and pointing towards a further recovery in the price of XRP. But once again, we've not yet actually seen that. We're just getting close to possibly confirming recovery in the price of XRP, but at least for now, technically this is still currently active. But if we're taking a look at the daily time frame, obviously in the shorter term, we are indeed following Bitcoin and a lot of the crypto market with the short-term bullish relief. And now, technically speaking, we're still within the descending parallel channel, which is technically a bearish trend, forming lower highs and lower lows. But in the immediate short term, things are looking good, especially with the breakout above the center line right here, which was holding down the price in the short term for around a week, and that was sitting at around $2.09 approximately. And the next major point of resistance to watch out for the price of XRP is sitting at around $2.45 to $2.50 based on these previous highs right here, and also this descending line of resistance coming into play at close to $2.50. And once again, simply just pay attention to what I said for Bitcoin to figure out what is most likely going to happen for the price of XRP. So for example, if Bitcoin plays out a bit of a short-term cool-off and then ultimately a breakout, expect something similar for the price of XRP. And if we're taking a look at the price of Chainlink on the daily time frame, right now Chainlink is also still running into the golden pocket area of resistance, sitting in between around 1490 to 1550. And previously we found a lot of resistance, especially at that $1550 level. And now, technically speaking, this is actually the Fibonacci level of support based on this previous retracement right here. But with that being said, this previous level of support has already flipped into significant resistance, as we saw with that rejection near the end of March. We've actually seen multiple rejections from that area. So that is definitely the area to pay attention to here in the short term, which means the price once again is likely going to struggle around this area. But if we can finally see a confirmed breakout, ideally with at least a daily candle close confirming well above 1550, and even better if we actually hold that as new support, in that situation that would be the first significant change in price structure for the price of Chainlink, pointing towards a bullish reversal out of the larger bearish trend. So instead of just seeing a short-term bullish relief during the bearish trend, as we've seen many times over the last few months, once again pointing towards a complete reversal, ending the bearish trend if we confirm a breakout above 1550. And technically speaking, while we're still running into this resistance where the price is currently struggling just in the short term, we're also still trying to play out the bullish divergence, because at least for now, this bullish divergence on the daily Chainlink chart is still currently active. And now if we were to see a short-term rejection here, expect support at just above $14, around $14.10 approximately, and more support at just above $13, around $13.20 give or take, based on this previous high flipping into new support. And as for further resistance towards the upside, if we can finally see a breakout above 1550, the next major point of resistance I'll be watching is sitting at around 1750 to 1760. And once again, if you want to trade any of these moves in the price of any crypto, check out those links below this video to those exchanges if you want to claim those massive bonuses that are only available using those links. And if you want to actually know how you can trade crypto, no matter if the price is bullish, bearish, or chopping around sideways, you can profit from all of that price action by watching these videos popping up right here on your screen. The video in the top left shows you how you can profit from bullish or bearish price action using long positions or short positions, and the video in the bottom left shows you how you can easily profit from choppy sideways price action. But anyway, that is everything that I have to say for today. I really hope you enjoyed, and I'll see you all in the next video.